for a look at some of the movers this morning. Let's bring in Jenny Horne, now co-host of Next Gen Investing. So nice to see you this morning, Jenny. And we're shifting our focus to China, the EV market in focus with some of those Tesla numbers. We've also had a report card out from NIO. What do you make of all of that?
I definitely would say that it doesn't seem like competition is easing in what is the second most lucrative market for a name like Tesla, being China. So it doesn't seem like we're seeing that threat of looming competition necessarily ease or moderate by any means. But I will say there's still some things to like that perhaps the headlines won't tell you. And that being that we are seeing, sure, Tesla's China-made electric vehicle sales dropped about 4% in August from a year ago. But that follows an 8.4% drop in July. So you could make the case that hopefully we're starting to see a theme of that pace of loss start to ease. However, deliveries of those Model 3s and Model Y vehicles that were made at their Shanghai factory, including exports to Europe as well as other markets, actually climbed 22.6% from July to just shy of 83,200 units last month. That is per data we got from the China Passenger Car Association on earlier today. So we've seen also now BYD extend some of their losses, as right now that accounts for about 80% of the global shipments for a fourth straight month, though, in August. But Tesla sales across Europe did just plunge. We got reports last week about 40% in July on the year, actually trailing BYD despite an overall EV sales rise, specifically in the continent. And I've always said you have to focus on what's going on here domestically when it comes to Tesla. But also, yes, I would definitely say that China is a hugely important market. They command about 20% of their overall sales. But Europe, not to discount, because now we've just seen 7 straight months of contraction as far as sales growth. Europe is a much smaller footprint than what we do already see in China as well as the U.S. So at first, I think, was really trying to reignite this narrative when they unveiled the Model Y. That was the newer model that was launched earlier this year. They've seen that do quite well overseas, as it is, I believe, their globally best-selling vehicle still. But right now, we're just seeing more and more of that stiff competition heat up. And Tesla, for a long time, was seen as the pioneer into the EV market, where they were the first to mass produce, the first to really see it on a profitable scale. But now we have new competition, and no longer do they really own the title of being like the first and best comer, because frankly, we're just seeing competition heat up. So they have to continue to grow in China at the same pace, or at least at the same pace that was guided for earlier this year, which is going to be relatively hard. Although I will say that based on Tesla's historical performance in the month of September, I know historically this is a weaker month, not necessarily always for Tesla though, is because it has been able to at least etch out a gain in the last 3 of 5 Septembers on a month-to-date basis. So it's not necessarily always a bad month for Tesla specifically.
I guess it's no surprise why we're seeing those numbers out of China for a company like Tesla. As you say, certainly the declines are narrowing, which is the good news. But I mean, they have been engaged in a price war, which they sort of started effectively. And, they just can't compete with some of these Chinese names. I mean, they do seemingly have an overcapacity problem in China, even though they don't think they have one. But you've got BYD even giving Tesla a run for its money, not just in China, but also in Europe too. You and I were discussing that last week. So I'm just, wondering, I mean, as someone who looks at Tesla very closely, I mean, it brings us back to the old debate, whether to look at this as a car or a technology company. What are your thoughts quickly?
It definitely trades on a valuation multiple like it's a tech company. There's no doubt about that. And now, do I think that necessarily makes sense? It's very mixed. It's hard to say, because right now they've also unfortunately fallen a bit behind as far as their FSD, and we've been waiting for this since 2019. And frankly, you look at right now competitors like Google's Waymo and some of these other major players right now in the robotaxi race here domestically, Tesla also doesn't really have this same edge on competition anymore. So I think that profitability has still remained a concern for every other EV name in town, regardless, really, I would say, except Tesla, because they've been able to still make money per vehicle, which is not something that anyone else can say. If you look at Ford's electric unit, you look at GM's electric unit, and BYD, many people forget, is still a legacy, a combustion vehicle maker. They just also have this massive EV arm. So Tesla kind of competes in a league of its own for that reason, because they're the only pure play EV company really out there. And I know newcomers have tried, like Rivian, to be in this market, but they haven't done so successfully. So I still applaud Tesla for that, for still being at really the forefront of this technology, but they have to continue to innovate if they want to still see this multiple justifying, I mean, relatively high, again, forward-looking growth, that right now it's going to be difficult to put up growth that matches these expectations.
You raise such an important point. It is just so competitive on either side. Let's switch gears to Klarna's IPO. Obviously, a fascinating story in the sort of buy now, pay later space, particularly off the back of what we've heard from Affirm last week. What are you seeing there?
Yeah, Affirm with some really strong numbers last week, and also really positive commentary from their management on their earnings call, because they basically, even not to directly call Klarna out, but Klarna had stolen some of their most valuable partnerships throughout the quarter, like with Walmart. And Affirm basically said there's plenty of consumer spend to go around. We're not really seeing this weigh on at all their business model. So that was encouraging. But now is Klarna's time in the sun here, as we did get some long-awaited public listing sort of details over the weekend, as they're expected to now raise up to $1.27 billion, with big stakeholders putting forward the majority of the shares in an offer here. So Klarna plans to offer roughly 34 million ordinary shares priced between around $35 and $37 a piece. The offering will value the company at roughly $14 billion per some calculations I was reading out of CNBC. It will trade under the ticker symbol KLAR. So we'll be curious to know that they will be offering about 5.6 million of those shares. The remaining, though, roughly around 28.8 million, will be put towards existing shareholders who are selling their stocks. And we know that the frontrunners of this expected really IPO is Goldman Sachs, JP Morgan, as well as Morgan Stanley. But Klarna, I mean, has been around since 2005, so it's not really a newcomer into the buy now, pay later space, but will be seen as that newcomer to the public market. But we've been waiting for this IPO in particular for, I mean, years now. And I think following a lot of the success, but then volatility we've seen with Affirm. But Klarna definitely, I mean, I'm just excited to finally get some more details and finally see it publicly trade, because I've been waiting every single year, like the watch lists I follow that say like expected IPOs in the coming 12 months. It's always Klarna. So I'm just excited to finally actually see a public debut after years in the making.
Yeah, and obviously this space is just really heating up. I mean, every week it just seems like the energy is palpable here as we see these newcomers to the market, and it really seems like they are choosing this time now that we've got past that initial volatility we'd seen at the start of the year. Thank you so much, Jenny, for getting us across those key stories this morning.